Hey you, welcome to today's backtest, and this is on US 100 on Nasdaq 100. That's the Nasdaq CFD. Backtest is going to be on these 2 days on the 23rd of February. You can see this down close candle on the 23rd and also on the 24th of February. So we are going to go through this down close candle and this up close candle, and it's going to be a brief one for today. And also, price is here to take out the buy side, which I pointed out. Okay, this buy side is more visible at the forward time frame, and also here to trade into there's a CB right here on the forward time frame, and this February fair value gap. So dropping to the forward time frame, okay, you can see the CB very visible right here on the forward time frame. It's a very big CB, sell side imbalance, buy side inefficiency. Okay, so sell side delivery has been offered and it's inefficient of buy side. So price is here to trade up to this buy side, and I think last week I said on my back test that this is a draw on liquidity. Okay, price will take out this buy side and run up into this February 1st presented fair value gap and into this 4-hour CB. So price is still yet to do that because of okay, why price was at this level, there was a sudden drop down in price. I think it was the day before CPI. CPI was on Friday. Okay, then on Thursday we got this drop down in price after the unemployment news reports. Okay, there was a drop down in price, which was unexpected. I didn't see this coming. Okay, I thought price would at this level take out this buy side at least. So let me go straight to 23rd. Like I said, I'm going to try to make this brief. Okay, so this is 23rd. So 23rd was a bearish candle, then 24th was a bullish candle. So this is the start of 23rd. And the drawdown in price happened during the New York AM session. You see this high was created during the London session. Okay, this high was created during the London session. And during the New York AM session, let's mark out 8:30 before the market open. The market opens at 9:30. Okay, so after 8:30, price ran up to take out this high, take out buy side liquidity from this high. And during the open of the market, that's 9:30. What should I say? After the open of the market, there was a displacement down in price. Okay, a displacement down in price. And you can see the gap being formed. Let me hide this. Okay, you can see this gap being formed. Okay, so there is a huge displacement in price, leaving a big fair value gap open, which price traded into. But we also have a new day open gap. No, not a new day open gap. We also have our Monday first presented fair value gap. Okay, like I said, there's a first presented fair value gap formed after the market open. And you can see this on the 1 minute time frame. And this is overlapping, this is forming at the same level where that's 5 minutes, where this 5 minutes fair value gap is supposed to be at. So the 5 minute fair value gap is supposed to look like this. The 5 minutes fair value gap is supposed to look like this, but since we have the Monday first gap, okay, already here, that's the one price made use of. Price also made, don't get me wrong, price also made use of the 5 minute fair value gap, but price also made use of the Monday first presented fair value gap, okay, which is at the same level. Okay, so let's see how this was formed. So like I said, after 9:30, the first presented fair value gap, okay, the one formed with displacement. So this is 9:30. Okay, this is a 9:30 candle, and this is the first gap created on the 1 minute time frame with displacement. Okay, and see me. marking it out as the Monday first presented fair value gap, and I extend it throughout the week, and price respects this as well. And see how price respects it. So back into the 5 minute time frame. Okay, so okay, after taking out this high, then this gap down, okay, then price traded up into the Monday first presented fair value gap. Okay, then drop down further. Okay, this is okay, during this rally up, okay, you can see this up close candle, then followed by this down close candle. So this is an order block. Okay, this is a bearish order block. Price traded, okay, price traded up into the other block and rally down further. Okay, down to take out these lows. You can see these lows. These are relative equal lows, and below these lows is the new week open gap for February 16th. Okay, yeah, if I'm not wrong, this is a new week open gap for February 16th, and price traded through that to take out this low right here. So, like I said, this is not the full practice for this. Yeah, I'm just trying to make this very quick, okay, because it's like a two in one back test, okay, for 23rd and 24th. So that's the story for 23rd of February. Now going to 24th. Yeah, so 24th was a bullish candle, and this is why you actually need to know the bias. Like, okay, not like you actually need to know the bias, but knowing the bias for the day or for the week, okay, where price is likely to draw to. You understand? Knowing where price is likely to draw to is actually very helpful. Okay, it's going to make trade more easier and more smoother for you. So based on the 24th, and this law was formed during the London session, okay, and formed inside this new week open gap for February 16th. And you see price taking out this low during the New York AM session. Okay, similar to what happened on the 23rd. Okay, just that on the 23rd it was a bearish day. On the 24th, it's a bullish day. Now you see this run up in price, this gap up, and created a very big fair value gap. This is a 5 minute time frame, by the way. And this is how it looks. Okay, this is a very big fair value gap. See price trading into the fair value gap first after trading into this Monday first presented fair value gap, respecting it, then going down into the fair value gap, gapping up, okay, above the Monday first presented fair value gap, and trading down into it and using it as support, trade down into it twice. Okay, now you see how price respect this Monday first presented fair value gap. This day was actually Tuesday, and price is still respecting the fair value gap formed on Monday. Okay, that's why I extend it all through the week, because price is going to make use of it as long as price trades on that level. Now it uses it as support to bounce up into the new week open gap for this is the new week open gap formed on February 23rd. New week open gap for Monday, okay, formed on February 23rd. These are this run up looks on the 1 minute time frame, because that displacement was very huge. I actually saw this play out and I was like, wow, this is a 1 minute time frame. Okay, after price took out that low, you see this gap up in price. Like this very huge, like it happens really, really, really fast. And that's that. So I hope you found this insightful. If you found this insightful, drop a like, subscribe, and have a productive week. I wish you success on your trading journey. Until next time, God bless.